company that has really been in focus is PB Fintech. First, for a foray into the healthcare space, and then for a clarification that there is nothing planned on it right now. So what really is the picture emerging? Yashish Dahiya, Chairman and CEO, PB Fintech, joins us now on the show. Mr. Dahiya, very good morning and great to have you on NDTV Profit. Thank you so much for taking out the time and speaking with us. So let me start by asking that conceptually, the idea seems to make sense that if you are selling health insurance, why not complete the chain and make it easier for people to access the end product as well? But how exactly do you aim to fulfill that need?
Yeah, I think let's call this a company XYZ, and PB Fintech is at some point going to go to its board and request for permission to take between 20 to 35% stake in this company XYZ. But it's important to understand what is XYZ doing and what is PB Fintech's interest in XYZ, right? So there are about 4 crore people in India who pay about 10,000 rupees every year on average to buy health insurance. And at the point of claim, they have a difficult time sometimes. And the reason for this difficulty is a lack of conflict, is a conflict of interest between hospitals and insurers at that point. For one, it's a revenue. For another, it's a cost. And also, ARPOBs have been increasing very fast. So the healthcare cost is really rising very fast. And the middle class India is struggling to keep up with it. And the insurance industry is also struggling to keep up with it. So the idea is to create an HMO. XYZ wants to create an HMO for the insurance industry and wants to pilot it in NCR by acquiring 6 to 8 hospitals and making sure and demonstrating that cost of claims can come down while giving good quality customer experience. As far as the customer is concerned, the idea is to make sure that something like bill and claim goes out of the customer's vocabulary. Because today, the customer has a lot of anxiety about what will the bill amount be, how much will be approved, how much will not be approved, how much is going to be settled by the claim, and then how much will I have to pay out of pocket. The idea is to make that experience seamless while still reducing cost for the customer. And also investing a lot more in care and wellness so that customers largely stay out of hospitals. See, think of a very simple thing. If dengue breaks out in Delhi, that's a cost for the insurance industry, there's a revenue for the hospitals. So to some extent, we're trying to align both of them, as in XYZ is trying to align both of them. Now, PB Fintech wants to take a minority share in this for 2 reasons. One, XYZ benefits a lot because of the existence of PB Fintech, because PB Fintech can explain this to hundreds of thousands of customers every day that, look, this is a great idea, you should try and take a product like this because it's beneficial for you, and thus popularize the concept. So to an extent, XYZ benefits because of that, because it gets scale because of that. And I think for PB Fintech, it's a huge advantage.
Yeah, can I just come in with one specific point on XYZ? And I must say, as someone who has been on that other side of claims and bills, and I'm sure a lot of our viewers connect with this, it's great if there is a seamless experience. I'm just trying to understand that for XYZ and the hospitals that they own or acquire, it doesn't make sense to reduce hospital bills. It just
does, and I'll explain why.
Yeah, so how do you run a hospital business with lesser bills?
HMO is not a new concept. HMOs exist all over the world. These are dedicated facilities. So this is a dedicated facility for the insurance industry. And thus all their processes, all their procedures, everything aligns and has got a huge amount of trust from the insurance industry. I'll give you a very simple example. Take 2 cities. Both have 10 million people. In one city, all the customers pay upfront and say, healthcare costs you have to take care of. The other city, everybody says, no, you don't take care of anything. I will pay when I fall sick. Now just think of a very simple thing. In city A, the hospital actually benefits if nobody falls sick because they've already been paid. In city B, the hospital benefits when people fall sick. Financially, I'm not trying to say anything more than that. But financially, there's a benefit because that's when hospitalization happens. So one actually benefits from higher utilization. One actually benefits from lower utilization. You are turning the entire, it's like I have already been paid. Now, every service I am providing is from my own pocket. So actually my interest is in the service. And now you just think of it mentally, between city A and city B, which one will be able to serve a larger population with a smaller number of rooms? My bet is city A will be able to service it, because city A has a defined interest in making sure people do not fall sick, do not end up in hospital. There is home care, there is strong OPD, there is strong wellness. Whereas in city B, the interest is I will make money when people come to me. So at least from financial interest perspective, city A will handle more customers per room than city B.
Sure.
And I think if one appreciates that, I think that is the real answer here.
Got it. Yashish, good morning. If this goes through, wishing you all the best for that. My question is from a PB Fintech shareholder's perspective. How much does the shareholder see PB Fintech investing in this? Because you have about 5,000 crores of cash, if I'm not wrong, in or about. So, and would the ROIs, simply put, I'm just using ROI as a metric, would the ROIs on that business be commensurate or better than what PB Fintech enjoys currently?
No, absolutely. So see, this is, first of all, it's an investment. It is not PB Fintech owning hospitals. The investment will be between $0 to $100 million. It's a one-time investment. There is no commitment to keep on investing into the future. This company XYZ will, in a good case scenario, prove this model works, and then either do an IPO or go into a REIT infrastructure kind of arrangement. But it is not PB Fintech's job to make sure that the next phase of its growth is funded by PB Fintech, right? So I think from PB Fintech shareholders' perspective, the total potential loss is the investment. Also, a bulk of this investment is going to real estate. I don't think real estate is going to go down to zero. Even if the venture fails, you will get something back out of it. So I'm just trying to, really talk small here. But at some level, there's a lot of defensibility in XYZ's, cost infrastructure is largely real estate cost infrastructure. Finally, the reason we believe in this is because it has a huge benefit to PB Fintech if this works, because the insurance industry grows. And so I think you cannot just look at the downside, you have to also look at the positive side. That maybe PB Fintech's business, if it was going to be X over 10 years, could be 3X. And the insurance industry, if it's going to be Y over 10 years, can be 3Y. And that benefit is much more than, let's say, $0 to $100 million one-time investment.
Okay.
So it's obviously very beneficial, and this venture also relies on PB Fintech. So this venture relies on PB Fintech for demand generation. To educate customers, this is a great model.
Okay. So would you reckon, therefore, Yashish, the other point is, I mean, what the venture does in a good scenario, and we really hope it succeeds, could be great from an investment perspective. I'm guessing healthcare would see multiple such options available. Would you want to venture into stuff like this, which also has business benefits, but also investment benefits? Just trying to understand the thought process here.
See, we don't invest very easily. We are not a very acquisitive company or a very investment-oriented company. But this just makes so much sense that we cannot not invest in it. And the advantage to both sides is, and the synergies are so high that it would be very foolish for us to sit out when something like this happens. When XYZ is happening, for PB Fintech to say, I will have no role whatsoever in it, I think would not be smart.
Timeline you're seeing, Yashish, to execute this acquisition of XYZ?
I would say quarters, not years, but unlikely to be weeks or months. So I think that kind of gives you a broad indication of timelines.
So more than 2, less than 4?
I don't know. I can't be that. It depends on XYZ, right? XYZ has to put together its consortia of investors.
Yeah.
And they have that task also. And they're talking to healthcare companies. They're probably talking to insurance companies. They're probably talking to development finance institutions. PB Fintech would be, management would love to take this to the board for approval. But it is still subject to board approval. But PB Fintech, in a way, would be ready to do its part. But the remaining 70 to 80% investment also has to be, organized. And that is a job that XYZ is concluding.
And XYZ would service only PB Fintech or other insurers as well?
It's for the insurance industry.
Okay.
It is not in any way, shape, or form. PB Fintech is a minority investor, as might some insurance companies be.
Okay, understood. Thank you so much, Yashish. I wish we could speak more, but markets are going to open in a couple of minutes. Best of luck, because if it's something that changes the experience of Indians grappling with healthcare and health insurance, that really will be something to watch out for. Yashish Dahiya there of PB Fintech on their foray.